Welcome back. And while, of course, we have seen a sell-off in various asset classes, including equities, currencies and commodities, it is the gold prices which are trading at a 7-month highs in the dollar terms and have hit an all-time high in the Australian dollar. That currency, of course, has seen a decline quite sharp. We've seen it trading lowest since 2009 versus the US dollar. And if you look at the gold in the Australian dollar terms, it has hit a record high at $1,894 per ounce. Clearly, there are worries about global demand consumption. There is volatility in the equity markets, the weak US dollar, the partial US government shutdown. All of that has led to some safe haven buying come in for gold. Adrian Ash of Bullion Vault now joins us on a phone line to discuss more about that. Adrian, hi. What a beginning to 2019. While everything, of course, is down in the dumps, we've seen gold prices continue to shine bright.
Indeed, it's a very happy new year for gold owners right now. Silver is catching up a little bit. So I think we're now back at kind of July, August levels in silver versus the US dollar. Gold is up at 6-month highs. But as you say rightly, gold is really moving very quickly in other currencies. The Australian dollar, also the Canadian dollar now, breaking out to the highest since September 2016. That is important, I think, potentially for the gold market longer term because they are big producer countries. So with Australian dollar gold prices being at record highs, Canadian gold prices also rising steeply, that's only going to encourage more supply. Now, 2018 probably saw a new record for global mine output. That won't matter much to prices in the short term. It may put an end to some of the speculation about there being some kind of peak gold in the industry. Obviously, gold mining supply doesn't impact prices directly because there's so much above ground already. Indian households own, 20,000, 25,000 tons all told, so that can always come back to market at a price. But what it might do is perhaps longer term just dampen some speculation because of sentiment. If gold supply is not diminishing, and this is only going to encourage more output short term. I think on the other side, though, clearly what's driving this move is what's happening in the other financial markets. I think the rout in global equities, clearly the terrible news from Apple yesterday on their earnings, really disappointing and really capping off what has been a very disappointing back half of 2018 for most equity markets. And I think it's interesting really to see how that has come through in other things as well. Commodity prices now 18-month lows on the Bloomberg index. 2-year Treasury bond yields in the States, 6-month lows. 10-year Treasury bond yields in the States are now backward. They've erased everything that happened in 2018. All of the rise has been entirely erased now. And I think all of this is very supportive for gold. It
is. We've started 2019 like that, but how long do you see this rout really continue? I mean, are you looking at a longer-term support for gold prices to continue? Do you think the longer-term horizon, like 18 to 24 months perhaps, is when we could see this run continue? Or is it very difficult to navigate from where we are right now?
I think, it's worth looking at the stock market. I think that has been what was holding gold back in 2018. Plus, of course, rising interest rates in the first half. Though, the interest rates have clearly come down now. I think, there's a huge question mark over what the Fed will do at this month's meeting now and then again in March. Will they dare to raise? I mean, this is, I think, looking increasingly unlikely because the bond market says no. So that is supportive for gold prices. Obviously, rising interest rates would be bad for gold, all other things being equal.
So what's your sense? Where are we headed in sense of gold and silver prices then?
Well, I think, 1,300 is clearly a near-term target now for the gold price. And I think on silver, if we were to see gold at 13, I think we'd probably expect to see silver back nearing 16. The gold-silver ratio, silver has been undervalued against gold throughout 2018. And I think a lot of people have been expecting a snapback on that. Obviously, the problem for silver is because it is primarily an industrial metal, that a weaker global growth discussion, talk of a global recession even. Obviously, the weak PMI data out of China, the very poor third quarter Japanese GDP figures, slowdown in Singapore now we've seen. So that may weigh on silver, but gold as a store of value, I think, really depending on what happens to the stock market. And I think it's very difficult to look at the US stock market now and see the chart as being anything other than broken. I think the S&P 500 at the moment is looking very bad as a New Year chart. And I think that is probably going to be looking good for gold, which is technically looking very strong right now.
Absolutely. In every currency that you see, the gold prices continue to make headlines on the higher side. Adrian, thank you so much for joining us and giving us a sense on what really can be expected in the precious metal prices. Also joining us on the show now is Teague Gnansekar. Gnansekar, hi. What a day again where we have seen a complete sell-off in crude. The base metal price is looking for direction, but the gold and silver price is holding firm.
Absolutely. I mean, all the factors that you have discussed, I think it's very clear that gold has a decent upside to go in the coming quarter at least. With possibility of interest rate hikes not happening, I think there's a good chance that we might see this rally extend and continue higher. And it's sort of becoming predictable because every year we're seeing that post the rate hikes, early January or February and possibly into March, we see some kind of a rally that happens in gold. And then it sort of peters out. I only hope that it sustains and further positive cues come, which I think will happen this time around because of expectation of a weaker dollar. So my feeling is I think the domestic prices, with the way the rupee could get a little volatile, we should be headed towards 34,000 in the near term.
Okay, that's another couple of thousands away from here. But what's your sense in the metal space? Because Shanghai is down, LME saw some buying. We, of course, are reacting to the rupee calculations as well.
See, to me, metals, I think in the short term are going to show some volatility. In fact, it might get weaker a little bit. The China manufacturing data, which is a very important indicator, has gone below 50, which is like, which clearly indicates contraction, and that's going to play in the minds. But let's also, keep in mind that metals can bounce back very sharply because overall, fundamentally, I think there could be a supply shock in the coming year, is what my sense is. So I'm not too bearish on metals from here, but in the short term, definitely bearish in metals. But in this fall, I would look to position myself for the medium term as far as metals are concerned.
All right, buying gold and silver for sure, looking to accumulate metals on the lower side. Longer term looks good in the base metal prices. Thank you so much, Gnansekar, for joining us and making us strategies for those metal space there. But with that, it's all the time that we have on this edition of Closing Bell. Thank you for watching.